Now, Small Business Tuesday continues with Your Money, Your Call.
Hello and welcome to Your Money, Your Call. It's Tuesday night and we've got lots of questions hopefully coming from you, our viewers, about shares. So it's a shares edition tonight. I'm Jeremy Hook from TMS Capital. And if you'd like to ask a question, the number to call us on is 1300 30 34 35. You can also contact via email. So use yourmoney@skynews.com.au and we'll try to get to those questions. Please get them into us. We love your questions. And joining me to answer those questions tonight is Richard Hemming from Under the Radar and Gary Glover from Novus Capital. Welcome Richard and welcome Gary and welcome everybody to the program tonight. So a good day for the market, but Gary, it's not maybe got so much in it. May doesn't tend to be a great month for the market.
No, it hasn't been for, I guess look at the cycles there. The 6 year, it's also got a bit of a, like the first week of May has marked the high for the last, almost like the last 40, 50 years on the 6 year. Yeah. I know there's the old sell and main go away. It doesn't always work, but it tends to work very, very well on the 6 year. Yep. But just look at the market from a technical perspective. We've sort of been caught in a band from what, 40, or this sort of 53, 50, sort of 5400 region right down to say 4900. We've sort of been trading in that band here for quite some time here. So we are back at the top of the band here now. So we're sort of coming into the right time of year for when we normally sell off, hitting a bit of a high here, everything's sort of popping. To me, I was sort of writing a few calls today, hooking over some of the banks here. So
yes, I was going to ask, I mean, for the benefit of the viewers, you take both a fundamental and a technical view. You use a lot of technicals though, I know, and you use derivatives. So selling call options because you think the market has probably run pretty hard, get a bit of extra income from doing that. Yeah,
I mean, look, it has been a range-bound, sideways orientated market for quite some time here. So I generally just sell calls over stock I own. I don't sell any uncovered calls. So if a stock's had a pretty good run here and I think there's probably not much to run, then rather than give it up or sell it, I might just sell a covered call against it and try and pick up some extra income. That's pretty much it.
Excellent. Great, Gary. Richard, you write the Under the Radar report and...
Not calls.
Oh, not calls.
Not calls. No. We don't write calls. You
go long stock.
Yeah, we go long.
And your stocks are generally small and mid-cap stocks.
Oh, generally, and I think, what you're talking about is exactly the kind of stock pickers environment, because I think like a lot of the easy gains on the market are just not there anymore because we're seeing the Fed sort of on a tightening bias, and I think with some of the big stocks we're seeing them, I guess, aggressively sold off. I mean, we've seen that with BHP, but I think at the smaller end there's definitely value. You just have to look very hard for it.
Okay, we're going to look into a couple of those through the program tonight. I know that, but we're going to take our first call. Brett is on the line. Good evening, Brett.
Oh, hi, Jeremy. How are you, mate?
Yeah, very well.
Good. Mine's regarding Macquarie Group. Obviously, they reported very well, very big dividend of $2.40. Yep. I've heard you talk about Macquarie before. I just like your thoughts. I got in at low sixes. I'm looking at topping up. Yep. And if Gary doesn't mind, can you just give me a technical how it's looking on the charts for me?
Yeah, thanks for your call, Brett. No, I do like Macquarie. I did like their report last week. We got that on Friday, and it was probably in that week of bank reports, Brett, the better of the four companies that reported. We also had Commonwealth with their quarterly yesterday, but Macquarie, just to focus on that for a moment, that was a record result. The outlook is good. It has been sold down, notwithstanding a bit of a run-up after the last couple of trading sessions post the result. But it was the only bank to substantially increase its dividend during the week, and it doesn't tend to get bracketed a lot with the retail banks, the big four as we call them. And we don't really look at it the same way. It probably is more compared against rival banks internationally. But Macquarie is the bank out of the five that has greater growth. I wouldn't be looking at the regionals. I think the larger big banks look good value to me, Brett, but Macquarie, additional to that, is good buying at this level. Look, I think it'll move into the mid to high 70s, notwithstanding the dividend, and I think it is a stock that you can keep buying. So I like the look of it. MQG is the code. Gary, how does it look technically to you?
Yeah, look, it doesn't look too bad here. I'm probably a bit more neutral, some of the banks here, just because they've all had a bit of a run here, a bit of a squeeze here. So, look, Macquarie hasn't gone above its last little swing high, so I think that's more than likely here. So I think at least maybe 71, something like that. Look, I'll probably be looking to write a call against this if it goes much higher, Hooky. But look, there's some momentum here. Last time we got an interest rate cut, all the banks rallied pretty hard for 4 or 5 days. So we've had that. So probably the biggest gains have been made here already. So maybe they'll just go a little bit higher here. But yeah, that's probably the way I look at it. Yeah.
Yeah, it was a big week, wasn't it, with the rate cut helping the banks along, Richard? I mean, is this one that appeals in any way?
Oh, well, I think it's a momentum play, definitely. I mean, even after the sell-off, you've got an environment where corporate deals are always going to be around when you've got low interest rates. So it's an environment which favours Macquarie Bank. But I mean, like, I look at the yield and it actually looks quite good. But like, I just think they're so leveraged, these beasts. Like, and when if you are nervous about the underlying economic conditions, which, let's face it, our Reserve Bank are with the recent interest rate cut, then you've got good reason to be nervous about those big leverage plays like Macquarie Bank to the Australian economy, certainly. And looking at offshore, I don't see many reasons to be that confident anywhere else, actually.
Yeah. No, it's an interesting one. I mean,
I don't want to be a killjoy, but...
No, well, that's what we're here to do.
It's a beta play, really.
It's a high beta player. It's always been a high beta player.
Yeah.
And then for the benefit of those who don't know...
Who don't know the Greek alphabet as well.
That it will move in greater proportions than the market move. So it'll typically move double.
Well, all these stocks are highly leveraged, and Macquarie would have gone under but for their banking licence and the Australian taxpayer, to be perfectly honest.
Yeah.
And like you know, in terms of how the stocks plays fundamentally, the market's saying 6% yield. Well, the market's saying we don't really have that much confidence that that yield's maintainable. That's what I feel.
Yeah, it is. Noting on Macquarie, unlike the other banks, the franking due to the offshore earnings is only 40%. But nevertheless, we look at a total basis.
Those financial planners, they just love franking. I mean, the banks have played the franking game, I think, better than anyone ever imagined. And I think franking's proven to be a lot less important in terms of what your investment philosophy should be, bearing in mind the kind of recent declines of the banks.
Yeah, it's a good point. And we might run into an email which takes on that theme. And Susie has written in to yourmoney@skynews.com.au and said, I would appreciate the panel's view on bank stocks. I am seeking a high yield and some capital growth. What stocks would the panel suggest? So I think maybe as a starting point, there's probably two questions there.
So yeah, there's a couple of...
And Richard, just on that theme, so maybe you'd be looking somewhere else other than bank stocks?
Look, I think in the small cap world you can definitely get big yield. The question is whether it's sustainable, because like every time you see something that looks really good, bang, normally the rug's pulled from under you. I would say with the banks that on the demand side of things they're going to be struggling because they can't lend to foreigners. I guess they're going to be a big section of the economy is under a cloud with the mining and mining services kind of section, which they would have previously lent to. So, but there is a company that I've looked at recently, Villa World, which is like they're a residential developer mainly based in Queensland, and like I think 65% of their earnings or 85% of their actual like housing stocks in Queensland. I think like that company is trading on a yield of something like 9 or 10%.
Yeah.
They increased their dividend, but I think the fact is that the Australian economy is on its knees, and people really for a company to be trading on a dividend yield that high, I think people really don't believe that it's possible, because I think we're starting.
I think they're viewing, obviously with property,
Well, the property in Queensland, the mining related economies are really struggling, and there's only so much interest rates can do. You know,
there's definitely that. I'm not sure I'd totally agree.
That is a big yield, that 9% yield.
That's big, and that suggests some risk. Is that one that you like, though? Are you?
Well, I think we've backed off on our buy recommendation for that stock, but it certainly comes to mind in terms of one that I've looked at recently in terms of a big yield. And with these big yielding stocks, I would say that there is risk attached, but it's got a good business model. But I think like these mining communities are going to be doing it tougher and tougher. Yeah, okay. There's certainly points I'd agree with Richard, but I'm not convinced the economy's on its knees. I think I'm talking about a company whose base is in Queensland, and Queensland is a mining-orientated sort of area. A lot of the growth in the Australian economy is coming out of New South Wales because a lot of the infrastructure spend is happening in New South Wales because they did the recycling of assets. So I think, like with all these sort of, you've got to look very specific. Like in the small cap world, there's you've got to look very specifically about where the industry is positioned and where they're positioned in the industry. And I'm saying you're getting a big yield, but there's danger money there because that's a very good point. I think on the viewer's question about the banks, I mean, at the moment there, two things obviously happened with the banks recently. They obviously came back and priced there quite some pretty cheap sort of numbers there, and that was pricing in obviously rising doubtful debts and the mining side of things, and just basically some issues that we're going to be coming forward with the banks. Also pricing in flat earnings moving forward as well. So I think largely that's kind of priced in here. So we've seen a bit of a bounce here now. So we've probably had a good run. They're probably getting, fair to maybe on the fully. So they were amongst the stocks you're selling calls on? Yeah, I mean, just look the last couple of days. I mean, CBA today had a pretty nice pop. NAB's up around the last swing high as well. So they've all had a pretty nice run. NAB was, I like holding. I think the stocks are safe to hold here. I just think maybe from a price perspective, if I was wanting to buy them, I'd be waiting for them to maybe come back a bit lower here again. And I think where Susie is going, with a lot of people are at, looking for income, looking for yield. The banks are paying very big dividends. We've got, ANZ was ex-dividend yesterday. We're now seeing that we've got Westpac ex-dividend on Thursday, NAB on Tuesday. So you're not waiting very long to receive big licks of dividends, and they're certainly going to be appreciated. We thank Susie for her email, and we're going to head off to a break very shortly, and then we'll be back after that with more calls from you at home.
We need to bring back the Australian Building and Construction Commission to clean up illegal union practices in our building industry and lower the cost of construction. We're paying up to 30% more than we should for hospitals, schools and roads. Even housing affordability is affected because of the high cost of building apartments. I'm asking for your support to bring back the Commission for lower construction costs and more jobs.
Authorised T-Nut, Liberal Party, Canberra.
The award-winning Serato is now in run-out, and in May we're offering a $1,000 gift card across the Serato range, starting with the Serato S with free auto from $19,990 drive away. Plus all Kias come with our 7-year factory warranty.
When I first came across the idea of a bouquet you could eat, it just resonated with me. We just had this gut feel that it was going to work, and that if we loved it, other people would love it. The most important thing for us is the taste and the look. Actually, this one looks amazing here. Look at this, perfect. As an online store, the customer experience is my number one. When my customers are happy, I have a business that just keeps growing. I think one of the things we recognised really early on is that people were time poor. So from our Neato online store from Telstra, we actually have a lot of touch points with the customer to keep them updated on how we're going, that we're making it, that it's being sent out and when it's arrived. When my business systems are working beautifully, it means I can spend my time where I want to, which is really about the customer.
Toyota means business. Jump to it for deals too big to miss. With amazing end of financial year offers on a huge range.
Take $2,000 off all Camry petrol models. Or get Corolla Ascent Sport, now only $22,990 drive away. See your Toyota dealer now or search Toyota Value. Jump to it.
I love the smell of broadband in the morning.
I love the smell of unlimited broadband. Now Foxtel has unlimited broadband bundles for endless entertainment.
Whoa.
Foxtel Unlimited Broadband. Powered by entertainment.
8 more weeks. Do you reckon we can put up with it that long?
You've made a really good start, though, because you've got one of those black holes. I mean, not anybody's just got one of those. I mean, we had one of our own ones.
You got your own black hole.
I mean, it was not nearly as big as this one, yours. That's a massive
but you know
black hole.
What happened in the budget? Your mob developed their own black hole. Wednesday night, Beatty and Reith at 8 o'clock. We'll give you the real in-depth story. The story behind the news, not just the sham and the flim-flam and all the spin. We'll tell you what's really happening. Sky News Live.
Welcome back to Your Money, Your Call. The number to call us on is 1300 30 34 35 or email yourmoney@skynews.com.au so we can hear your questions. And we're actually going to go to an email. Jim's emailed into the show about primary health, it looks like, PRY. Could you and your panel please give me your views on primary healthcare, PRY, the mining industry? Has been fairly turbulent, and I'm wondering whether it'd be a good time to buy in. So I'm presuming Jim might have been in the mining industry and looking to something in the healthcare industry as something different, because there's not much mining going on at primary. But primary's had a really interesting year or two. Primary was dreadful in 2015, got sold down into the low $2 zone. We started 2016 and it picked up very quickly, particularly with a better than expected February half-year report, and then news that Yango, the Chinese equity company, had bought in and now own a stake of around 19%. They're the group that bought Vision Eye Institute last year, which Primary was once a shareholder in, and so hope is that potentially Primary goes higher on the back of a bid. What do the charts say, Gary?
Yeah, I mean, you're right there. I mean, it went from $2 to $4 in 5 weeks. So, so obviously the market got that wrong. But you know, since then it's pulled back a little bit. The selling's dried up here. So to me, it doesn't look too bad here. But it'd be nice to get this one just a little bit lower here. Yeah. Maybe $3.20, $3 something.
And it looks like it's doing that, just edging back.
Yeah. So it might be, you know, I guess if you're patient here, you might get that at a better price here.
Okay. Yeah, it was certainly good news, Richard, when the earnings were clarified. The market was clearly worried about the direction of earnings, but the sector as a whole has been good for a long time. Primary has been pretty inconsistent, though.
Well, I think it's a kind of a sector where people think is somewhat of a safe haven, but I think the price action, as you can see, shows otherwise. And I think it's a bit of a furphy that any sector or any stock is really a safe haven. We tend to be a bit more aggressive because we like you know, smaller companies in the sector, which you know, it's pretty much boom or bust. Yeah. but like Main Pharma, I think could be an interesting stock. It's not going to be really a dividend player like this company, but they are entering an interesting period where you know they've really expanded well in the US, and I think now some of the drugs on the generic side are getting approved, and they've been waiting a long time for that because the FDA's been throwing some money there. Yep. So this is probably you know, one which I guess is interesting because it's got US exposure, whereas primary healthcare is pretty firmly here. If it's just here,
yes, it is.
And it's very capital intensive. So I guess we're looking for a bit more bang for our buck with some of our stocks.
Yeah, okay. Regulated too. I guess they were lucky they didn't really cop it in the budget last week, which was one of the fears going into the budget. But other stocks have performed a lot better in the sector, Gary. And like Richard said, the obvious appeal of the healthcare sector can often lead you down the wrong path and into the wrong stock. Ramsay, CSL, Cochlear, there's been some really well-performed stocks.
Yeah. I mean, Ramsay's back up near the highs here again today, actually. So do you actually sort of maybe sell a little bit and try and reposition that in something which is, you know, maybe got more growth in it now, I guess. So because obviously, like every sort of great company, at some point they do hit the growth sort of curve there where it starts to sort of flatten out. So
they have to look offshore normally to achieve that, which Ramsay's done.
That's the question with Ramsay, is how far that growth can keep going. If we keep, obviously, like a Domino's, if you do keep going, it can be wonderful. But at some point there, you do reach that saturation point. So.
And I reckon, Gary, that's why I like small caps so much, because normally they're kind of taking market share, not defending market share. So there's, I think if you can look beyond, the big stocks, you can see a lot more variety in the world, and there's a lot more different sort of ways to play the healthcare game than simply, someone that's obviously got a good niche in the Australian market, but it's questionable how good its investment niche is when you're looking at the broader sector.
And you could take that argument across to a lot of sectors. I mean, the big caps where most
lots of my friends have been buying a lot of the US banks and even some UK banks. So, yeah, exactly. When you broaden the field, I think it's a good thing.
Yeah, excellent. Okay. Thank you for that one. Our next caller is on the line. We've got Sue from Melbourne. Good evening to you, Sue. Hi, Sue. No? She was there, but we don't have Sue, but we will have an email, and that...
I think she was after IEL.
No?
Yeah. Yes. Thank you, panel. I just would like to know about IEL.
Yes.
And ANSELL.
IEL, which is IDP Education, and ANSELL. Okay. Thanks for your call, Sue. We got Sue eventually, and we got two very good and interesting stocks that she's asked about. IEL was the spin-off sold out of SEEK, so we've certainly had some focus on that, having been good holders of SEEK for a long time at TMS Capital. But this one's been a well-performed stock. Richard, did you get to look at this stock?
I think we've pretty much avoided the education sector in the wake of vocation, and I think a lot of people have been scared. That's why I'm just so amazed at the performance of this company, because the education sector has been a bit of a graveyard because it relies so much on economic rent, which basically means, getting money off the government. And consequently, people always say, oh, what do you think of these sort of stocks in that sector? But I just think it's somewhat of a value trap, and I get very nervous when you're looking at a sector that's so reliant upon government regulations and government monies. But this one might be different. I just don't know it.
Well, there's no doubt in the vocation training areas there were some pretty disreputable operators. Certainly IDP is not one of those.
No, we're not saying that, no.
But very well managed by the Bassett brothers when it was part of the SEEK empire. The only thing I'd say is I wish they'd sold it for a bit more, because we would have accrued more value within the SEEK shares. But the question, I guess, Gary, is, and a technical view would be handy, is what's the stock price going to do now?
There's not too much price action there, so I know that to me, it's sort of been sort of meandering around. So it's look, there's a little bit of selling off that last high there. So there's a little bit of volume did come in there, but look to me, it might drift back a little bit here, but there's nothing too negative I can see really overall there. Okay. But again, it's had a bit of a run as well. So I just see a few things drifting back here in this market here. So but it's not a stock that I follow too much. I prefer. I quite like 3PL, but it hasn't been performing too well.
Okay, yeah. 3PL's difficult, but that's had a very difficult time. That Mathletics isn't quite getting the traction. I've got the advantage of having children who use Mathletics, and Schoolbo's kind of taking over. So 3PL has been very disappointing, I think. But yeah, it's definitely, I think a difficult space to play because of the economic rent sort of.
Would its numbers now look pretty good? 14 times earnings, about 3p?
Oh no, it still looks pretty expensive to us. Yeah, looks like it's not.
So earnings on the way down still?
I don't know whether they're on the way down. I'm just saying it looks expensive. So maybe the earnings.
Basically, you've gone into those. In the Australian market, you've got to 50-60% of the market. UK, you're up to 30% of the K1 to K12 market there. So every market they've gone into, they actually have got become the dominant player there.
Yeah.
So the move recently was to go into the Canada and the US.
Yes.
And the last report was about actually throwing some money at that and actually going after, because obviously the growth out of those two markets was ahead of anticipation. It got marked down because they're spending a bit of money to go into those markets there. So kind of rolling the dice a little bit there. But if the US is such a segmented market, there's no real one dominant player in that market. There's lots of little players. So there's definitely room for someone or a 3PL. I mean, even if 3PL gets only 10% of that market, it's an enormous,
it's a big market to get a piece of,
yeah,
interesting.
Talking about the, ARPU was so small too, Jeremy. It's like $8 a license,
Yeah, so
bugger all.
It's got some interesting features about it, but some good points from both of our panellists about 3P on the back of comments about IDP. We'll have a look at ANSELL after a break we need to take. But if you'd like to give us a call, 1300 30 34 35 will get you through, and email yourmoney@skynews.com.au. Back after this break.
When you have a dream to start your own business, you need more than just a good idea and a can-do attitude. You need a great education to set the foundation and help you take your idea to the world. You need great teachers and mentors to help you be the best you can be. It takes lots of hard work and many skills. And one name helped me make my name, APM at Torrens University, Australia.
Uh-oh.
What's up?
Does nobody use a turn signal anymore?
A rental property can be a rewarding investment, but even with great tenants, there'll always be life's unavoidable accidents and uncertainties. Standard building insurance may not cover damage caused by tenants or loss of rent, leaving you out of pocket. Terry Shear is Australia's leading landlord insurance specialist, with award-winning landlord insurance from $1 a day to protect your property and rental income. Call Terry Shear today or go online. Need a good reason to host Australia's biggest morning tea for Cancer Council? You're a morning person. You love hearing the latest news. You've got a bit of a sweet tooth. You make the best cakes in the office. You loved your dad. You hate cancer. To host Australia's biggest morning tea and to help beat cancer, text T4 to 0487 222 555 or visit biggestmorningtea.com.au.
Whenever news breaks, we're following every move the leaders make.
The Australian people will decide.
When it's all happening, we're live with more channels, more choice. Every day until the final seat is called, we're on the road, live from the battlefronts.
People will look to Sky
and election events.
For the insights.
The debates.
This is it.
The stoushes.
He's got rocks in his head.
For breaking election news.
I watch Sky News and Paul Murray.
The people you know.
Mr. Spears.
The programs that set the agenda.
I just watch Sky.
Your network got the exclusive.
Perhaps an elder statesman. You heard it here first.
Insights.
Opinions that count.
I'll tell you what's really going on.
For unrivaled multi-channel coverage of election 2016.
Sky News.
Sky News. Is Sky rolling in?
Keep watching Sky, everybody.
You can rely on Sky News, Australia's election channels.
Welcome back to Your Money, Your Call. Joining me on the panel tonight is Richard Hemming from the Under the Radar report and Gary Glover from TMS Capital. If you have a question for these panellists tonight, please pick up the phone and give us a call. 1300 30 34 35 will do it, or email yourmoney@skynews.com.au. Our next caller is Dan from Sydney. Good evening, Dan.
Hi, good evening. I've got two questions about Virgin Holdings, the VAH and ANZ.
Yes.
Yeah, can you give the recommendation on those two shares?
Yeah, sure, Dan. We'll answer those. Virgin Australia Holdings, VAH. We'll have a look at that before we go to ANZ because it's certainly not one we get asked a lot about. I imagine there's probably some residual holdings amongst viewers from holders of Toll Holdings, which was taken over by Japan Post last year, but they did have a holding in Virgin, which they spun off. It's been a poor performer more recently, Richard. Any comments you can give to help Dan?
Oh, I think airlines are very, very difficult. Your timing's got to be superb with airlines. And I mean, you talk about banks being cyclical, miners being cyclical. I mean, like there's so many variables that they have to really hit a sweet spot, and Qantas managed to do that. But it's a long time between drinks, and I think it could well be that stocks like Virgin and Qantas are stockbrokers' dreams because you have to buy and sell them pretty aggressively to actually make any money out of them.
Yeah.
So we tend to, I mean, the capital intensity of these, the variables of fuel and labour costs. I mean, it's just mind-boggling, really. It's like, I don't know. I struggle to actually understand why you would ever invest in an airline.
Yeah,
but having said that, people made a lot of money out of Qantas, and there is a time for everything. So, but you have to be so focused and really really on your mettle and quick to take profits or quick to cover your losses or whatever. That it's a dangerous area.
Yeah.
It's like flying a plane in the 1920s. You just wouldn't do it.
Well, that one's gone down pretty rapidly, Gary. So avoid for Richard.
Oh, look, I agree 100% with what Richard's saying there, really. I mean, the airlines typically aren't great investments. There is a time, occasionally, when they get under, NTA or if they're really, everything's going against them and they really get walloped there.
And the fuel price goes...
Look, we've really just come out of an environment where the currency was $1.10. I know it's drifted back now, but we've been living in those times where we could travel anywhere around the world.
Yeah.
For so cheap, fuel prices are so low here.
But
so, this is.
But that's
you're
all
probably just coming out of
You've
just coming out of the sweet spot for travel, and look at the share price here. It's not going well.
Yeah.
So,
and I think the difficulty with airlines is they're competing against governments. Like governments are using
Middle
these
East governments, yeah.
Well, not just Singapore Airlines.
Sure.
Like a lot of airlines are government owned. They're basically arms of their tourist industry. Well, which they are here, but they're government owned. So you're fighting against someone who's got pockets that are much deeper.
Now I know it's interesting. One thing Richard said is a stockbroker's dream, really. Now, have you ever bought and sold it? Has it ever been a good one for you? Because I don't reckon there's been a lot of retail buying and selling.
Yeah, look, when Qantas was trading under its book value, things like that.
Qantas, Virgin?
There was a... it's been I can't remember. Look, I'm sure I've traded Virgin, but probably not in the last 3 or 4 years.
Yeah. And we might just quickly get some comments on Dan's question about ANZ, Gary. How do you rank the banks?
Oh, look, I'm not here to rank them and stuff there. I mean, because obviously, look, I always remember when David Murray's at CBA, he used to always sort of say that the banks is, it's 4 gorillas and 3 bananas. They're all fighting for market share, and so there's always sort of 3 doing pretty well and maybe 1 not doing so well, generally speaking. But at the moment, they all seem to be doing, fair, not exceptional. So probably at the moment, they're all probably,
pretty level.
Yeah. I mean, I know you've got your different exposures there. If you like the Asia story, you probably get a little bit of ANZ. I do like I'm not as negative Asia as a lot of people are. So I have ANZ in quite a few of the portfolios. But, I mean, CBA is obviously the premium bank, so that's got to be in the portfolio of some mind here, and then you just switch between NAB and Westpac there in terms of what, or a bit of Macquarie if you want a bit of beta or a bit of international exposure. So,
I just throw NAB in there just to round it out, just because, like, when you look at small caps, often you like turnarounds stories because they're the ones that I guess where the expectations are often the lowest. And I think with NAB, that's like last time I was on here, someone asked me about the which banks, and I think that NAB really is doing well to turn its operations around, having had some problems in the UK that they've kind of extricated themselves out of. And I think that that I think has some a bit more momentum on its side than the others.
Okay, excellent. Thanks for that. We did promise Sue just before the break we'd talk about ANSELL, which was her other question actually. ANN is the code. ANSELL has had a mixed sort of last 12 months, but has in many ways been a good stock over a longer period. Gary, how do you see it at the moment?
Yeah, look, I just thought I'd have a look at the longer time frame here. I can see here, going back here, what, the last 12, 14 years, it's had a low of $4 and a high of 30, so definitely had an exceptional run there. Yes. You know, so through that period. So recently, obviously, it's pulled back here, got as low as 14, so hit a bit of a key technical level. I can see here on the monthly, around 1685 is the 50% of the range, and it seems to have sort of keep bouncing. It's bounced off that level a few times there, so to me that suggests that it's probably going to find support above, around that level there. So again, it's had a little run here, might drift back, but I guess 1685 is probably a better level for mine here for that one. But it mightn't do too much here now. That's the only thing that worries me there.
Looks like it might stagnate. Certainly earnings lost direction over the last year, and that contributed to a PE wind back in the market. Richard, ANSELL.
I tend to look at these sort of things like, sort of bonds, and to me it just looks to be trading at a kind of on a yield that is too low for my liking. So
2.8%.
Well, I mean, and that's a forecast yield.
It's unfranked,
I mean, these businesses, there's a lot more risk in them than you're aware, and I think that there's a lot more risk, i.e. than a bond.
Yes.
So unless you get a serious premium to a bond, I wouldn't be interested.
Yep. And you mean premium based on yield?
Yeah. Well, I mean, that's how I said that I sort of look at them, and I think if you. I just wouldn't be interested, because you're never going to get the kind of growth that you're going to get from other sort of growth industries, or there's protection there, so they're good. They're good if everything else goes bad. But I just don't think they're paying the kind of income at them. You're not getting the kind of income that justifies the price.
Thank you for that.
Observation there. Sorry, Hookie. There just. In the past, when you've seen a stock have a fantastic run and then hit that growth wall and then the skids there, they have that correction in price, then they tend not to do too much for quite some time. So the pain's there and the market catches up. It's because normally you get a correction in price or you get a correction in time. Usually, in this case here, you usually get both.
Yeah. Okay.
So you usually get that price correction, then you get a lot of nothing here. So this stock here, more than likely, will probably not do too much here for quite some time. It'll have to get the market's confidence again.
And the fundamental reason often is there's rarely one earnings downgrade. It's usually a few. So it's.
And I think it's impressive that we haven't used one pun in this conversation about ANSELL. I think that's worth.
We'll have to lift our game.
Yep.
Okay, thank you. Our next caller's on the line, Lindsay from Newcastle. Good evening, Lindsay.
Good evening. How are you?
Yeah, very well. How are you?
Fine. I'm really ringing up to follow up on Richard's comments earlier about Villa World.
Okay.
I'm a Villa World shareholder as of recent times, but I was there before, and I was really surprised that Richard hadn't mentioned two of the directors, the directors' names of Villa World. The first director is Jim Jewell, the second is Craig Treasure.
Okay.
And I thought that was worth knowing for people who were looking for a quid.
He was looking for a pun as well too, so you might have given him.
Absolutely, and I provided it. Sorry.
You've done very well. So now,
and I've been hanging on. I wasn't even waiting for that, was I?
So excellent. We're very lucky to have you calling with those puns. And now, did you want to know what he thought of Villa World? Because you heard him earlier.
I'm back in there. I like it. I'm quite happy to accept the 10%.
Yes.
And the other share that I have in the property scene, once again within Queensland, that I've had for a very long time is CROMWELL.
Okay.
And I'm very happy with the dividends that they pay me on a quarterly basis and have been doing in large amounts for quite a number of years.
Yeah, no, excellent, Lindsay. Well, we'll have a look at that and look at CROMWELL. Let's see whether that's a jewel or a treasure. Or both?
Yeah.
What is it?
Well, I've met Craig Treasure, and he's no pirate, so he's not going to steal your wealth. But I would say that in relation to Villa World, what I was trying to say was, I guess what we're seeing is a boiling frog effect in the world of resources. We're seeing a lot of people delayed pain out there, and that was what I guess the interest rate cut. Like people, you think about it, people don't. They lose their job and then they think, I'm going to get another job. Then 6 months goes by and they think, I'm not going to get another job, I have to sell my house. And that's what we're seeing in the Australian economy, in the outer reaches, in the mining sort of, and that's what Villa World is exposed to. So we love the treasures of this world, and I think it's a very well-run company. But we think that price-wise it's going to struggle. But we think that they've got a good business model. We like the business model. But as far as Cromwell, we don't really go for property trusts as much as because we are orientated towards growth, being small cap sort of world. Yeah. But could I mention one stock in Genia, which they do?
INA?
Yeah, they've got a trust structure actually, but they're involved in manufactured homes and retirement accommodation as well as kind of tourist accommodation. And I think that that's a really big area. I think that's one area that all the viewers should look at, because there's a bit of a mini revolution occurring out there in retirement land, because a lot of people can't afford properties through the conventional methods, which is deferred management fees, and these ways allow these business models allow people to kind of get rental assistance and to buy cheaper properties. So I think that this is a growth area, and I think that's one stock, and we're looking at a number of them in this kind of area.
Have you looked at Aveo, AOG? That's one that we like as well as.
Oh right, no, I haven't looked at that one. What, AOG?
Another one, very similar. Metrics are relatively similar, and again they look good. But
the biggest one out there, sort of Gateway's been mentioned quite a bit. I mean, they listed recently, I think, and also
GTY.
GTY.
So the space has provided.
Well, I think it's an interesting space, because you think about it, like in America, 10% of properties are manufactured. In Australia, it's like 2%, and we all know labour costs are quite significant, and it costs a lot of money. The land costs a lot of money, but I think these business models are, I think they're providing, the booming baby boomers, or whatever you call them, avenues towards getting that affordable lifestyle, which I think is in need at the moment.
Well, it will be, definitely. Okay.
No, it is now.
Definitely. Cromwell was Lindsay's other question, and that's it's a good REIT. It's got a yield of around 7.5%. That's unfranked. Again, it meets exactly the kinds of needs that Lindsay's mentioned, and a good, consistent income stream. Gary, how does it look to you?
Yeah, look, it looks okay there, but it's.
He's not excited.
Yeah, it's probably not going too far either way. But
and that'd be fair to say.
The viewer's probably not in it for that reason either.
And the chart doesn't show the dividends naturally, but the dividends would comprise some of those falls where you can see. So typically most REITs wouldn't demonstrate for you a beautiful uptrending chart, would they?
But I think a lot of them are trading, whereas before they were trading at discounts. In the wake of the financial crisis, they were trading at big discounts. Now they're trading at sort of, I don't know to what degree, but they are trading some premiums. So I think you've got to be very careful in terms of the action that occurs, if there is. We were talking about this in the break, the potential for inflation at some point in the next decade.
Yeah, it may not be the next year or so, though, but at some stage it'll have to reappear, and again, that will change the metrics that we're talking about. But if you can get a good solid yield, it's 7.5%, and you're buying it at close to asset backing. Some you might have to pay a little bit above, and that'll probably catch up in the case of the good REITs. I think you do pretty well. So thanks, Lindsay, for your question there. We're going to take a short break now, but we'll be back very shortly to answer more of your questions. 1300 30 34 35 is the number to call us on.
Edwina's everyday banking is saving our planet, because we will never invest her money in fossil fuels. Tom is saving endangered species because we invest his money in conservation. And Tumar is putting people before profit because we're owned by our customers, not the stock market. Where you bank every day makes a difference. Change the world by changing where you bank. Bank Australia.
The award-winning Serato is now in run-out, and in May, we're offering a $1,000 gift card across the Serato range, starting with the Serato S, with free auto from $19,990 drive away. Plus, all Kias come with our 7-year factory warranty.
TV advertising where you only pay for results. It's possible. AdAd is the leader in performance TV. Commercials that drive response, effective media plans, unmatched analytics and insight, TV campaigns that work. AdAd offers pay-for-results TV advertising. AdAd covers the cost of media. You only pay for results. You get a guaranteed outcome for every single dollar spent. Targeted, effective TV exposure for your brand on leading networks. And you only pay for results. AdAd knows how to make TV work and puts its money where its mouth is every single day. Find out why leading brands use AdAd. Get in touch now to see if you qualify for pay-for-results TV advertising. adad.com.au.
You need a website. Why not do it yourself? With Wix, you can create your own professional website. Choose a template, change your text, add one of our images, or upload your own. And just like that, you've got your own stunning website.
Celebrate the BMW End of Financial Year Sales Festival with savings equal to the GST across the range. Hurry, this festival ends June 30.
What would drive humans to leave Earth on a one-way ticket to Mars?
Achoo! It's my hay fever. I'm allergic to the planet.
There's a world of pollen blocking my nose.
There are 2 billion cats on Earth.
If only they tried. Nasonex Allergy. Nasonex Allergy targets 4 allergic responses. It gives you more effective hay fever relief than antihistamine tablets. Nasonex Allergy. Enjoy Earth.
This is Penelope. Penelope enjoys fencing. She also enjoys investing. But she enjoys fencing more. So she uses Cashworks to find and invest in some of the major banks' most attractive term deposits. Dance time! Cashworks. It's worth it to work it.
Welcome back to the show. If you've got a question you'd like answered, please pick up the phone and give us a call on 1300 30 34 35 or email yourmoney@skynews.com.au. Okay, we've got a caller on the line. Excuse me. We've got Mario from Melbourne. Good evening, Mario.
Hello, how are you?
Yeah, good, thanks, Mario. How are you?
Good.
Your question for us?
Just got a question on Mortgage Choice.
Yes.
The price has dropped significantly and they're yielding on a grossed up basis over 13%.
Yes.
So I'm just wondering what the panel thinks of them.
Yeah, good question. Yeah, you're right. It has been poor over the last year or so, Mario, so we're going to have a look at that now. Mortgage Choice is a mortgage broker. It's only capped at about $200 million. Mario's quite right to say that it's fallen. The mortgage broking business performing solidly. A business they've ceased to operate in is helpmechoose.com.au, which is an iSelect version, but not a good one. And they spent a few $1 million and shut that down. So that affected performance, Mario. But they've got a financial planning business which is relatively small but growing quite well at the moment. And a yield in the order of 9% fully franked is a possibility. It's got a return on equity of 20%. And a PE under 10, so its metrics look good. But like we said earlier, sometimes that can be a worry, and it just depends on whether the market is right and is efficiently pricing it or not. And we'll ask the panellists what they think, and we'll start with Richard.
Oh, thanks. I think every time you see a high yield, I think, I'm not sure what the percentage would be, but it's a safe probability that they're going to cut their dividend. And I think like they're in a very tough space because you know, lending is falling, and there's a lot of, and you know, we're seeing, look at the moment, we've got the fight over negative gearing. You know, there's going to be changes on the housing landscape because Australia taxes income a lot, but assets not enough, and that's going to have to change given, you know, given what the government rhetoric is about fixing the deficit. So I just think, I think. Like, I'm not sure what Gary thinks, but I mean, whenever you see a high-yielding stock, it'd be rare, like a high-yielding prima facie stock. It'd be rare the number of times where that actually turns out to be the case. And when it is, you can make a lot of money.
Yeah.
But you know, that financial planning business has to grow very fast. That's what I would say.
Yeah.
And
well, it's only less than 10 times earnings. So how does it look technically, Gary?
Yeah, look, it's on its knees here, so obviously there's strong, you know, downtrend here. So it doesn't look too pretty here, but you know, I guess you look at those metrics here. It doesn't, you know, you start to look at it there. You'd probably have to delve a little bit closer in there and have a look at, you know, maybe each sort of business unit and just sort of see, you know, look, there's definitely some risk in there. Obviously, the housing market is, you know, being talked about in a negative light, you know, recently, so some concerns there. But look, maybe all those concerns are priced in. That's a possibility here. I probably just want to see a bit more of a, personally, I want to see a bit more of a clean out here from a technical point of view, just sort of see all the sellers exhausted.
There's not much volume or something, is that what you're saying?
Just not seeing too much going on here, you know, like really, like if you've got a good low in place, you'll normally see you know, the market will get behind it.
You see some volume come through.
Yeah, you're just not seeing that here at the moment. The rallies are very weak.
Yep.
So no one's really moving in there with any confidence at this stage.
And you're just seeing a slow sort of decline in the margins of the business. So investors really like growth. If they can't get growth, it has to be at a big discount to its NTA, and you have to see some buybacks and all that kind of stuff to see some consolidation of value. So they have to go through a clean out, not just in a technical sense like Gary's talking about, but also in a financial sense to really try to reboot the business.
Yep. Excellent. Okay, thanks for that. Our next caller is John from Tweed Heads, South Tweed Heads, I believe.
South Tweed Heads.
You're there, John?
Yeah.
How are you?
Good, thank you.
That's
How
good.
are you?
Yeah, very well, thanks. So your question
in
first.
business. But Santos said they'll give 40% back to shareholders.
Right.
So what's 40% of underlying profit? What does that mean?
Okay, so you're referring to their stated dividend payout ratio of 40%?
Well, I've got about 4,000 shares in Santos, and
Right.
they said they're going to give back 40%.
Okay.
Of profits here.
Of profits.
Yeah,
of
I'm sure
so we call it the payout ratio. Thanks for your call, John. Well, let's have a look at that, see whether that's possible. Santos
that's what
has
it looks
been under
like.
pressure. Righto, just wait a sec. We'll get this under control here. Santos has been under pressure from obviously lower oil prices and some debt which it carries, and the need that it had last year to raise capital. Equally, it's had some suitors which it's had to contend with. So we know we have some stakes taken and sold, and the question, of course, because it did fall again quite heavily today into around 390 or so, is that whether that dividend, which was cut quite heavily a year ago, is now going to be a worthwhile one. Look, Gary, it's been a rocky ride over the last little while. Can we just maybe get a sense of where that stock's going, and then we'll address that dividend issue?
Yeah, look, I mean, look, we've had a rally off that low for about 13, 14 weeks, so it's had a decent bounce, obviously, you know, sub 3 up to almost $5 there.
Yep.
But has pulled back a bit here. Look, I don't mind it here. I think this is going to do some work here and build here over time, but I still have some concerns with the actual US dollar has really been, if you follow the US dollar closely, as I do, it's been really good proxy for the commodities market. So it's recently pulled back, which has meant the commodities and resource stocks have had a bit of a bounce. But the US dollar's done what we call from a technical perspective, done a large ABC correction. Mm-hmm. It's come down to a good low, in my opinion, and it's now the last couple of weeks starting to show signs of bouncing, and that's usually a negative for commodities and resources. So I can see the US dollar, you know, moving higher here, which is going to be hard for a lot of the commodities to go higher in the face of that. It's just they just typically don't. go higher with the US dollar, so they usually go the other way. So I just see them sort of maybe drifting here, I guess, you know. Yeah.
Okay. So not a signal. Now let's get to this dividend issue, Richard.
Doesn't sound exciting, does it?
If the consensus numbers think that it'll make 6 or 7 cents a share, that dividend is going to be pretty low at 40% payout ratio, around 1%. So any comments on that?
Well, I just think, I think all the oil companies are going to struggle. Like Woodside, I think, has played the dividend game the best of all. But I think, the oil price itself is going to be, I don't think any of us know where the oil price is going, but there are big supply-demand imbalances there. And let's face, some Saudi guy said recently, we're expecting the oil price to go to zero. We're going to pump out as much oil price. Now, I don't know whether he was related to the Sheikh Salman. Yep. But I'm just telling you, there are forces out there that make dividends irrelevant, and we are going to see, the oil prices, they can turn the taps on and off very quickly. There's lots of geopolitical forces that we don't know, and it's a scary space. And we've seen some reverberations big time with with the corporate manoeuvrings in that sector. So yeah. I would stay away.
Okay, well, thanks for that. I mean, I think the consequence of all of this, John, is that the dividend that you've been used to from Santos, and I'm pretty sure they used to pay around 30 cents a year, and they were a very consistent dividend payer. It's going to be a lot lower this year, and that's a reflection of the difficult times in the oil markets, which affect their earnings and affect their dividends.
And they also got caught up in the LNG market as well, I think.
Appreciate that as well. We're going to go to a short break, but we'll be back with more of your calls in just a moment.
Toyota means business. Jump to it for deals too big to miss. With amazing end of financial year offers on a huge range. Like new look RAV4, now $31,990 drive away. Or get bonus accessories on Hilux SR5 4x4 double cab turbo diesel. See your Toyota dealer now or search Toyota Value. Jump to it.
Music is my life.
From the director of Philomena and the Queen.
She can't be a little flat.
Flat?
Just a tad.
Comes an inspiring true story. Meryl Streep, Hugh Grant.
They're going to love you.
Florence Foster Jenkins.
Cashworks gives you direct access to some of the major banks' most attractive term deposits, so you can search them and work them without having to go anywhere else. Cashworks, it's worth it to work it.
What would drive humans to leave Earth on a one-way ticket to Mars?
It's my hay fever. I'm allergic to the planet.
There's a world of pollen blocking my nose.
There are 2 billion cats on Earth.
If only they tried. Nasonex Allergy. Nasonex Allergy targets 4 allergic responses. It gives you more effective hay fever relief than antihistamine tablets. Nasonex Allergy. Enjoy Earth.
The award-winning Serato is now in run-out, and in May, we're offering a $1,000 gift card across the Serato range, starting with the Serato S, with free auto from $19,990 drive away. Plus, all Kias come with our 7-year factory warranty.
When you have a dream to start your own business, you need more than just a good idea and a can-do attitude. You need a great education to set the foundation and help you take your idea to the world. You need great teachers and mentors to help you be the best you can be. It takes lots of hard work and many skills. And one name helped me make my name, APM at Torrens University, Australia.
I loved speed as a kid, like if Dad was taking me around the block or something, if he just accelerated a little bit, I was definitely attracted to it. On a weekend I was watching TV and motorsports. I was just really drawn to the speed, it fascinated me. So obviously Top Gear, Chris Evans, he's a car enthusiast. And I can get my fill of cars 24/7 on Discovery Turbo. Motor Month is always a highlight.
Find BBC Knowledge and Discovery Turbo in the Docos pack.
Spears, Murray, Gilbert, Jays, Kenny, Keneally, Van Onselen, Bolt and Redley. Exclusive insights, unrivaled coverage of election 2016. Sky News Live.
Welcome back to Your Money, Your Call. Our next caller's on the line. It's Ken from Sydney. Good evening, Ken.
Good evening. Look, my wife last week had some sort of magic information, and she bought some shares in a company called IoT that makes drones. Mm-hmm. And in that, when I got home at lunchtime, she convinced me that I'd put some money in, and I bought it at 6 cents. At the end of the week, it went to 9 cents. This week, it started off at 12 cents. Today, it went up as far as 17 cents, dropped back to 15 at the end. I wonder what some of the panel might like to think of that one. Mm. And there's another one, Sea Farms Group, who have plans to send 100,000 tonnes plus of tiger prawns to China in a relatively short time. And I'd just like some comment on that one also.
Okay, great, Ken. We'll have a look at those. IoT is known as the Internet of Things, which is a very catchy name, Gary. Yeah. And that's a pretty catchy share price movement, isn't it?
Yeah, it is, yeah. Now, they've got those little selfie drones as well. You can sort of follow you around and take pictures of and stuff there. So I think the reasons why it's popped there is they signed some distribution agreement in the US with some group, and that group there has got lots of big clients, like some of the bigger retailers in the US. So still early days. These guys actually did come through a long time back. I know that the guys involved with this, they've actually tried a few ventures before and they just haven't worked out. But maybe this is the one that is gonna work out. So look, interesting little company, but it's a bit of a risky play here. But look, they've signed a few agreements in place. Definitely market for it, really, for what they're doing. So yeah.
Don't know whether you'd put your hard-earned into it.
What's your favourite drone stock, Richard?
Yeah, not this one. I think it's like, I've never seen an idea with a listing more obvious than this, but like you look at the financials and you see a lot of zeros with no numbers in front of them. And I think it's there's always so much hype, but I think you have to sell into the hype because there'll always be an opportunity to buy. I doubt it'll get away from us.
Yeah. Okay.
I think you look at there is
they're at the base of the mountain.
Market cap with these things.
Yeah,
as well.
that's right. Yeah,
it's not. It's 15 million or something.
That's pretty small, so it wouldn't take a lot of sales to start making sense.
Yeah.
Like I would try and get out when you get in at 4 cents. I try and get out at 15.
Yeah. But equally, if there's something to that, they could keep going, couldn't they?
Yeah, I mean, look at Yowie. I mean,
they're right. Yeah.
But Yowie had more going for it than
It's a chocolate bar in the bloody US. Jesus.
Yeah, but they had a patent. They had a patent to sell that encapsulated chocolate in the patent. They still do.
It's working. When it's working,
that Yowie.
Stock will keep going. So, but Ken's wife's clearly done very well with that. What about Sea Farms? I mean,
genius.
The idea of king prawns to China has certainly got some appeal.
Nothing wrong with that.
Ability of aquaculture in this country, but often we've seen companies not meet their expectations and having technical or operational failures. So, how does that look, Gary?
It's not one that I
What's the code?
SFG. Sea Farms.
Yeah, it's pretty small.
Yeah, look, it hasn't done too much here. It looks like it's been drifting sideways for a better part of a few years here. Yeah. So, yeah, I don't know. That's like a lot of those sort of agricultural stocks are fraught with danger. So, I think even like Tassel, it was around for quite a few years before it got its stuff together. So, it can really, if everything's going to be aligned for them and going right for them a lot of times. So,
and if you look at it, listed companies such as Clean Seas have had a very tough time with the fingerlings in South Australia. Tassel Group more recently has had problems in Macquarie Harbour. Hugh in aquaculture, I think the same. So there's been a few reasons for people to be a bit sceptical. What do you think, Richard? I mean, Tassel
I think Tassel, like we got into Tassel a long time ago, but mind you, they basically wiped out all the investors before that. Yes. So they went into like insolvency, and then sort of relisted. And the guy who was in charge of the insolvency is now the managing director. Let's leave that aside. But basically, what I'm saying is, when we got in there, they'd spent a lot of money on hatcheries. So there's big capex. There's big capex, and what Tassel have on their side is, I guess, the domestic market, because you can't import salmon unless it's headless. So, and that head's what keeps it fresh. So they've got a really good market. So if you can overcome those kind of obstacles in terms of capex, in terms of getting your hatcheries or whatever you need to get the prawns going, the tiger prawns, sorry. I mean, I think there's a possibility, but obviously from looking at the long history of this company, there's been a lot of promise for a long time, and it's and they haven't delivered really.
Yeah, yeah.
So I mean, to say that they're going to deliver from now on is a big call.
They would like to deliver, I'm sure, but
everyone likes to deliver.
They may not be able to. That's exactly the point of the panellists. Thanks for your call, Ken. Our next caller is on the line, and we have Noel calling from Coolangatta. Good evening, Noel.
Yes, good evening, panel. My question is on Contango.
Okay.
CTN is the code. What is it? What's it doing with what it's got, and where's it going?
Yeah, all excellent questions, Noel. Let's have a look at that. CTN is the code. Contango is really a listed investment company, this one. The Contango Group have got a couple of LICs.
They've been around for a long time.
There's been one that, like Richard just said, has been around a while. Richard, how's it gone?
Oh, I think they've, the fact that they're still around is a good thing. I mean, it's a tough space, micro caps, but I think I mean, we don't really I just think
buy what they are. CTN,
we wouldn't.
but they may have some of the stocks that you
maybe. I don't know. I don't really pay attention much to what Contango have.
But from Noel's point of view or a viewer's point of view, to buy into something like that, notwithstanding that we're not going to be able to reproduce the holdings right now for you, Cole. No, we don't know those, what they actually hold. But the idea of investing in microcaps through a vehicle like an LIC, in which case you can get a portfolio with one purchase, there's certainly some value for an investor in doing that.
Oh, well, I mean, on our investment committee is Jeff Wilson, and he's the LIC, the king of LICs, and he spends his time looking at the NTA and looking at the discount, but he's I'm not going to say an insider, but he knows the characters very well, and he knows exactly what they can do. But you've got to question whether or not a company that's been around so long can I guess, trade at a premium to change the dial on what the investor expectation is for them.
It's interesting, and Jeff has small cap funds as well as larger ones.
He's got everything.
He does. But from an investor point of view, investing in micro and small caps where the returns can be greater is a very good way to go. It's hard for them sometimes when they have to pick them of their own. So going through a vehicle is a good idea.
Well, I think sometimes to have the vehicle in your portfolio is an option, because I think gaining experience yourself and getting an understanding of the market through not just investing in one stock is a good thing. Everyone wants a diversified portfolio, but that's a good one avenue towards getting a diversified portfolio is including that in your basket of stocks.
They're actually interesting, the LICs, because if you actually go through and analyse each of them, obviously they all do slightly different things. Some of them do quite similar things, but if you go and look at their track records, it kind of does dictate their pricing a bit, because now the LICs have got to pretty much report every month their NTA.
Yep.
So you can go through and actually look at where the share price is, what the NTA is, and then go back and see their performance, and you'll see that some of them trade at a premium to their NTA, and some of them trade at quite a discount. I just looked at Contango, the NTA here just come out a few days ago was 110.
Yeah. So it's trailing quite.
So 106 after tax. So it's quite a big discount there, and that's normally, it means its performance has been as good as
people aren't
LICs.
expecting them to outperform.
So the longer standing ones, the Argos and all, are trading at premiums to asset backing. Jeff's, which have performed well,
the WAM, Australian Leaders Funds, sort of trade at least NTA or slightly above.
Yeah, so it's an interesting sign. So,
but Jeff himself actually invests in other LICs, and what I'm saying, he'll look at stocks trading at a discount, and that would be something that would encourage him to invest.
Yes.
I was curious as to, if these LICs, obviously they buy investment funds, if their stock's trading at 15-20% under NTA, Why don't they just buy their own?
They do, some do, buy back, yeah, you would do, exactly right. Thanks for your call there, Noel. That's a good one. Maybe the vehicle's the right one, but certainly the idea is right. Our next caller is Peter, who's calling from New South Wales. Peter.
Oh, g'day, Jeremy and guys. This is just one for Gary, I guess, a mason. Actually, I'm happy to hear what all of you have got to say about it, but it's one that just seems to be lagging a little bit, and I thought it might have caught on to the telecom space a bit better.
Yeah, okay, excellent, Peter. We'll have a look at AYS, a mason, which is the reseller. It had a listing last year and had travelled pretty well, Gary, but
went from 180 was the listing price, got up to 330.
Yep.
I was lucky enough to buy some on the opening the first day at 176, and but yeah, I sold most of one out. I actually did rebuy some after this dip.
Okay.
And then I bought some.
And that was an earnings downgrade?
That was it really was just the growth. Basically, the market was after a bit more growth, so it really wasn't, in my opinion, wasn't that bad a result.
Yep.
It was a good result, just probably wasn't as good as the market was hoping for. And the price got really well up there to the point where it got down to 120 or something. So I think I bought some at 180, 160, 120. So
nice.
Yeah, so it's had a bit of a bounce. It's now pulled back again. It's now bouncing again. I do quite like it.
Yep.
So I think it's going to drift. I think it's going to move a little bit higher here.
So it's profitable. It's on a reasonable.
I don't know if it is profitable.
What's the story with it?
Yeah, I mean, look, it's in that. So it's the more sort of I guess the risk is that it's the non sort of plan sort of stuff there. So you'll find most university students sort of kids plans on them because they're flexible. You can sort of pay as you go sort of plans. They don't lock you in for any 12 or 18 months. So you can just sort of pay as you use the phone, which is really the way a lot of the industry is moving towards that way. So that's obviously been one of the reasons for its popular and growth there. I think last year, it was the second most new licenses after Telstra in terms of new users there. So pretty good growth rate there. So look, the only concern was there was just probably market was thinking they were going to
do more than they did. Yeah.
I've seen a few broker reports here with valuations of 220 to 240 here at the moment. So quite a few brokers still think there's a bit more upside here. I do like it here. I think it got probably overdone on the downside here, and hence it's bounced a bit since then, but I think it will probably continue to bounce.
Okay, thanks for that, Gary. Now, Richard, it hasn't been as well performed as some in the space. Are there any that you like that are better than?
I've been looking at Vita Group for so long and just missed it every time, and it just annoys me that I keep missing it because, I mean, the guys, some of the team that I work with, one of the guys just can't, I guess is sceptical that a group that's a reseller of anything can add value to any great degree. And the woman, I can't remember her name, Gary, who's in charge of Vita Group, but she's been extremely good in extracting value from that Telstra franchise. But I say with the other one, Almesium or whatever it's called.
Almesium.
Yeah, I'm always sceptical of stocks that list, and I just like to see a bit of track record before I get confident, because I know they put these prospectuses together, and I mean there are some opportunities there, but I don't think we have to take them because there's so many other stocks to look at.
So Vita Group largest on the Optus side there.
Yeah, they use Optus, don't they? Yeah. There'd be larger ones than them,
No, not with Optus, no.
Right, okay.
So,
but they wouldn't be as big as Optus themselves.
No, but Optus is sort of, most of it's all sort of farmed out there really with different,
Virgin and the like.
Yeah.
It is the growth sort of from a store rollout, or is it?
No stores.
It's just a reseller. It's virtual.
It's all right. There, so that's the whole niche there. So it's really designed for sort of beauty. Look, if you're wanting to, most people who give their kids phones or paying for the university students to have the phone there, probably 8 out of 10 will be on a Mason plan. It's probably one of the cheaper packages. They're more flexible. So quite innovative, good marketing. They have a nice referral system. If you refer one of your friends, you get a. So there's some clever stuff in there. Yeah. So
Sure, one of my boys has got one, but
you'll find out.
50% return on equity, 15 times earnings. Might be an interesting one there instead. We're going to go to a break now, but we'll be back in just a moment, though, after that break, for more of your questions.
Toyota means business. Jump to it for deals too big to miss. With amazing end of financial year offers on a huge range. Take $2,000 off all Camry petrol models. Or get Corolla Ascent Sport now only $22,990 drive away. See your Toyota dealer now or search Toyota Value. Jump to it.
Over 500 boats, over 230 exhibits. The Gold Coast International Marine Expo is the boat show with so much more. Free on-site parking. Buy your tickets online to win. May 19 to 22, Coomera.
Join the thousands of Australians who are saving with real insurance.
I save $35 a month.
$421.
$600.
Go online and save up to 15% on your car insurance. Or call Real on 13 19 48.
Occasionally, people come along who are not content with simply moving things along. They want to take things further. Bored by reinvention of the superficial kind, their goal isn't to improve on what has been done before, but to totally reimagine it.
When you have a dream to start your own business, you need more than just a good idea and a can-do attitude. You need a great education to set the foundation and help you take your idea to the world. You need great teachers and mentors to help you be the best you can be. It takes lots of hard work and many skills. And one name helped me make my name, APM at Torrens University, Australia. What's up? Does nobody use a turn signal anymore?
Face to face for the first time, Malcolm Turnbull, Bill Shorten, live, answering the people's questions. Unscripted, unfiltered, the People's Forum. Friday, Sky News Live.
Welcome back to Your Money, Your Call. We're coming into the last segment of tonight's show. And our next caller on the line is John, who's called from Greenwich.
Yeah, g'day.
G'day, how are you, John?
Yeah, really good, thanks.
That's good. What's your question for our panel tonight?
All right, look, it's about a tech company named Empired.
Yes.
And I bought in around 90 cents and the price has tanked.
Yeah.
And I just want to know whether the panel thinks I should sell, buy more or hold.
Okay, that's a very good question. Thanks, John. We'll have a look at that.
Okay.
Richard, can the Empire strike back?
Oh, that's good. I mean, I think of all the puns or all the comments tonight, that is, I mean, that's champagne. I think when it's West Australian based. Russell Baskerville's the managing director. They have two arms of their business, like, you know, they're kind of like a people type business where they hire their consultants out and that's kind of, and they also have, I think they provide an enterprise solutions, which is a higher value kind of business. And basically, I think they burned a hole in their pocket by not once your utilisation rates fall on those when on the business relating to the people side of things, it can really hurt the company. And I think the company got oversold when it got to below 30 cents, and I think it's bounced since then. We're keeping an eye on it, but I don't think I'd be a seller. We were, I think in companies, I guess, they have, you know, operational risk, obviously, but they also have expectation risk, which is kind of a bit more grey. And I think with this company, like with many small caps, they didn't handle the expectation risk, and they certainly didn't handle the information side of things. And, you know, the managing director selling in the December when they sort of knew that, it just, I guess a lot of people got very angry, and you dumped the stock, but like, other companies where they've dumped the stock like that in the past, like ASG, we made a lot of money from, where people sold out, and then we thought, no, we still like it. We like the business, and I guess, you know, there is risk on that people side of the business, and a lot of these companies are trying to transition away from that sort of old school or old style of business. Towards the more software as a service. They can't say that enough, but you know, the actual transition is always a lot harder in practice than the company rhetoric kind of suggests. So I believe in their business model, but I think it's, you know, you've got to watch it very closely. So we've been right so far in terms of, you know, putting it on a spec buy once it got to around 30 cents and watching it climb from there. But I guess it's, you know, they're on, they can't afford to disappoint again. And ASG, they certainly,
I remember that well.
They certainly recovered well. So, you know, we're hoping, it did take a while, but, you know, like it takes a while for investors to kind of believe the story again. And I think what happened was kind of a risk that was factored into their business, and that wasn't, but I don't think they handled the expectations well.
Okay, thanks for that,
tricky
Richard.
sector, isn't it, really?
It is.
IT, I think apart from what Technology One, Xero or something, there's been lots more trouble than the good investments in this space here. So it's been tricky because lots of them have sort of fallen out of bed on a regular occurrence. So it can be a really tricky space to be in. So but you know, maybe playing them when they're down on their knees is probably the way to look at these things.
And is it recovering on the charts?
Yeah, look, we had a bit of a bounce there. It was definitely pretty heavy volume on the way down there, so the selling was pretty aggressive. Look, it's had a bit of a run here. The volume's dry up a little bit now, so that's probably telling you a little bit it's sort of running out of puff here. But you know, for Richard, maybe, you know, best thing to do maybe is just sort of drift sideways here and just use up a bit of time, and then maybe it's got another leg later on. So
great. Okay, thanks for that, Gary. And thanks, John, for your call. Our next caller is Matt from Ballarat. Hi there, Matt.
Yeah, g'day. Look, my inquiries are regarding the tech company Cavada, CVT.
Yes.
Bought in midway last year, and it rallied its way up to mid-60s, and it's starting to come back down on the background of signings with big companies like Cisco. I guess given where we are with cybersecurity and people wanting not to be hacked, where do you boys see this company in the coming months?
Yeah, good question, and thank you for your call, Matt. And Richard, I'll go to you on that one. I mean, this has got a bit of excitement about it, and I know you'll be excited to provide some...
Well, I mean, I'm just excited for you being excited, but I think, like, I get excited when I see earnings, okay? When I see earnings growth, and at the moment this company isn't even generating sales. So I think the market, for me, the market's big enough for me to look for companies that are actually generating growth in earnings, and that there's enough risk for me to be happy with. With this sort of company, you really... You know, they always just, you know, it's by association. It's kind of like the mining equivalent of neurology. Yep. So, you know, you really want to see contracts. You want to see that they can get their hands on money. Otherwise, they'll be asking you for money.
Yeah.
They'll be asking you for money before you know it.
So news of contracts and the like are good, but we want to see some hard evidence of where it's going to.
Well, you got to fill in the market cap, don't you? With substance. Yep. Otherwise it's just all hope.
And that is what makes the hard part of analysing stocks that we have to do. Gary, how does it look? And I'm not thinking your initial look on the face is positive.
Gary hasn't been too excited by many stocks tonight.
He's a good poker player, but I tell you what.
Doesn't look so good here. No, it looks obviously come off there. I know 20 cents last time was where it bounced off of, so it's had a rally up to 45. Now it's come back to near those levels, so look, there was a little bit of volume to come in at 25 cents, so that told you that people were starting to get interested down there. So that's a little bit of hope there for someone. But yeah, probably going to drift back a little bit further here, but yeah, I guess looks like there's some support a little bit lower here, but I can't get too excited by it. Yeah.
So it's not one that caught your eye at any stage along the road?
No, I still actually quite like. There's a little IT player in this Tesseract, which is TNT is the code there.
Nice code.
Oh yeah.
Yeah, so I like that actually. I really like Keith, who's running that company there. They've just done a little bolt-on there, and I think that's actually got a potential to sort of grow quite nicely there. They had some troubles getting listed there, but they have been profitable there, that company. So.
And what do they do?
IT security. Okay. So.
Well, there we go. That's an alternate with profits. Did you say? Yes.
Yeah. Before. Yeah.
Please, Richard, as well.
So. Yeah, it's probably worth a bit of a look, that one, actually. Yeah.
Yeah, I think it is a pretty good point that, really, announcements are great, but the black ink of income coming in is really important.
Actually, if you look at the board of TNT, that's got a really pretty awesome board, actually. So hopefully that means it's a good thing. Yeah.
Well, that's great. Thank you. That's all we've got time for on tonight's Your Money, Your Call. Thanks so much to our guest, Richard Hemming from Under the Radar Report. Thanks, Richard.
Oh, thank you, Jeremy.
You're welcome. And Gary Glover, who's from Novus Capital. Thanks, Gary. And to you, our viewers, thanks for your calls, thanks for your emails. You make the show, so keep them coming. Until next time, I'm Jeremy Hook from TMS Capital. Thanks for your company.
The information featured in this program is general in nature and therefore should not be relied upon. Guests appearing on the program may have commercial arrangements with some of the companies mentioned. Before making any investment, insurance or financial planning decisions, you should consult a licensed professional who can advise whether your decision is appropriate for you.